Okay,
There it is.
there we go. Can the rest of y'all see my slides?
Yes, sir.
Okay.
Looks good.
So
All
go
right.
ahead and take off.
Okay, this is John talking about cotton. Just a brief summary going back to planting time in South Texas. You can see that the brown color, it was drier than average when y'all were probably wrapping up planting. Much wetter in northwestern part of the state, and that stretched over to the Delta, which has had big impacts on the cotton market since. Mainly too wet to plant in the Delta and in parts of the Southeast. This is May, showing improvements for standing crops in Central and South Texas. The rainfall in the Southeast is still there. This is 2 weeks ago, or 3 weeks ago, 2 weeks ago, 1 week ago. So we've had lots of rain, and it's had mixed effects. I think it's contributed to good crops in South Texas. It's an iffy situation whether the rain hurt or helped or had any influence in the rolling plains and the South Plains and the Panhandle, and it's definitely hurt the U.S. crop in the Delta, which has had an influence on the balance sheet that USDA has put out. This is the resulting drought monitor as of a week ago. So USDA put out a June WASDE report, which is the last column of numbers in this table. And ordinarily, the June WASDE report is a nothing report because they go out on a limb and make their big projections in May, and then in June they usually don't do anything. But in this case, they cut month over month. They cut harvested acres and they cut yield, and that was all attributed to wet prevented planting in the Delta, which opens the question, well, gee, what are they going to do with the planted acres report, the June 30 planted acres report, which is coming up? Are they going to reduce planted acres even more, which would tighten up this balance sheet considerably? But as it was, they lowered production a real healthy amount, and the bottom line of it, if you go down to what's circled in red, this ending stocks number was 5.2 million. It was 800,000 bales more year over year than the 24 crop, and they dropped it to essentially 100,000 fewer. That's a pretty big adjustment, a month over month adjustment, and it's, like I say, it's unusual for them to do this time of the year. It opens the door for the July report to potentially continue to be a surprise, particularly as I've noted up here in the margin, if we have a really low level of planted acres on top of what they've already done in June. They could tighten up this balance sheet even more, and that might catch the market's attention and give us the long hoped for rally that if it's going to happen at all, it needs to happen early in the summer, because after that the seasonals tend to work against us. This is another thing that's working against us. This was a contributing factor to price weakness for the 24 crop, and it probably will continue to be for the 25 crop, and that is the production of our main rivals. Australia is producing on the high end of their range. That's the blue line. Australia is producing 5-6 million. They're projecting very strong, if not record yields, which they harvest now in the month of June. Brazil is the red line, and that's represents an ongoing uptrend expansion of production that had an effect last year. Brazil had a big crop, which they sold at 5 cents cheaper than what we were selling for, so they're out competing us. And the forecast is that when they harvest their new crop, which I think is July and August, they'll be doing a repeat, out competing us with large supplies, which is contributing to the price weakness, and it's contributing to the bearish speculation in the market. I want to say a quick thing about tariffs. We can't really talk about the demand for cotton, or for that matter, feed grains, unless we say something about the influence of tariffs. The first bullet is basically long, convoluted way of saying that most economic studies suggest that tariffs slow the economy. And to the extent that the economy is slower, that's bad for, I'll volunteer, it's bad for grain consumption. It's bad for cotton consumption, particularly. That's what every economic study would show. The second bullet is to make the point that that's what the markets are confirming. Every time the markets think that those high level of tariffs that were proposed in early April, if the market thinks that that's going to come to fruition, then the markets don't like that, and they tend to crash. Stock markets, commodity markets, currency markets, interest rates, nothing likes the idea of these tariffs, which just confirms the economic logic of all the studies that have been done on tariffs. So anyway, that's kind of a big question mark hanging over the general economy and hanging over the cotton market as a result. And I would remind everybody that in early April, April the 2nd, we imposed all these high tariffs on a bunch of countries, and then we postponed them for 90 days. If I'm not mistaken, those 90 days are up at the end of this month. And if they don't negotiate all kinds of trade deals with all those countries, then we may have markets not liking that. So we'll have to see. But that's hanging over the demand picture. We also have negative speculation that's still there, reflected by the downward green spikes. That's a large negative position, bearish position, still held by managed money that they haven't bought their way out of this yet. Now, I'll use this to tell my silver lining story. My silver lining story is that the USDA acreage report comes in surprisingly low, taking out acres from the Delta, but maybe taking out acres from West Texas. That's sort of an open question. If they do that, the market could rally in response to that. That could scare these guys out of their short position, which would sort of like be a catalyst. The buying, they'd have to buy themselves out. We could see a rally that we've been waiting for with December futures, which have been way down at the bottom of this long-standing trading range. They've been in a tight, narrow range in 66, 67, 68. They could pop up over 70 cents. And my thinking is, in the short run, post acreage report, maybe before or part of the July WASDE report, we could have a short. The best time I can imagine is that we would have a rally now, because if it doesn't happen soon, the seasonals, which are shown here, tend to work against us. We have weaker prices usually that kicks in June and July, down to the seasonal price weakness. So that's working against us. And then there's other concerns about, like I say, the demand and the tariff stuff and the 90-day deadline and all those sorts of things are going to hit the market at roughly the same time. So if we're going to have anything bullish, it's probably going to be from the supply side, and it's probably going to be happening soon. And if it does, and the futures get to 75, then I would encourage people to think about taking some action, because that may be the best that we get. And that's all I've got. I can't see where to cancel.
Should be just stop sharing.
Oh, yeah. I think
I have to stop sharing.
Yeah, it looks good, John. You're good.
Thank you.
Great, Dr. Robinson. Good information. I hope it does get to 75 for producers' sake. So, good information.
So do I.
Want to take this opportunity to welcome Kara Matheny. She's the new Victoria County agent, Ag Natural Resources, and she's agreed to kind of co-host this deal, and appreciate her coming aboard. And do you have anything you want to say, Kara, before we go to, I guess we're going to Dr. Anderson next?
Bobby, thank you guys for inviting me to join in. I'm looking forward to it. I think the opportunity to share the information these guys can bring to the table is going to be invaluable to our producers, and kind of allows us to continue to be on the forefront of the conversations that they're having when it comes to market stability and what futures look like.
Yeah, I agree, and appreciate you coming aboard. So I guess with that said, we'll send it over to Dr. Anderson and get us a livestock report.
Well, let's see. Can you guys see me okay here? Or at least see the screen okay? That's the main thing.
You bet. Looks good, Jeff.
Yeah.
All right. Great. Well, I kind of titled this deal High and Rising because that's exactly what the cattle market looks like is high and rising. And it's I think we've got some pretty interesting things going on besides just high prices, which certainly give us a lot of kind of excitement in the marketplace. But I'm going to jump right in with some prices, but I want to start with the wholesale market. If you look at the box beef cutout value, this is for choice beef. We're up about $390 per hundredweight last week for a weekly average. That is the highest, on record, except for, a couple of weeks in May of 2020. And that's probably all I need to say about why that was in May of 2020, pandemic related. And that goes across a bunch of the cuts that make up the box beef cutout. But, essentially, we've got two things going on. We have very good demand for beef. People are buying. We've also got some sharply tighter supplies just over the last few weeks, maybe 2 months, compared to a year ago. So we put together tighter supplies with good demand, and look what we've got going on in the wholesale market. Now, you might notice in the last CPI report that retail prices for beef actually slipped a couple of cents. But again, that's actually backwards looking about a month, but certainly we got sharply higher wholesale market prices that's really supporting everything else as well below it, whether we're talking fed cattle or calves. There's a couple of striking things in here that I'd go with prices. Now, boneless beef, that's beef that is going into ground beef. It's not necessarily what we're talking about, muscle cuts. This is a fresh beef, 50% lean. So very much related to our fed cattle production. So, a lot of our, really lean beef is coming from the cull cow market or coming from imports. A lot of the fat to go with that lean is coming from fed cattle. And this is not part of our, at least directly part of the cutout, but really shooting to record high prices in this boneless beef. So, really this cut that we're seeing, a reduced fed cattle beef production going on, has really shown up here, given that we're still in the summer, it's still grilling season, and lots of hamburger demand going on, and really prices skyrocketing for this boneless beef. I thought I'd highlight briskets too, because if you get Texas Monthly, you saw in the last couple of weeks the barbecue edition, the one they do every 4 years, the best 50 barbecue places in Texas. Hit your mailbox or wherever you pick it up and read it online. We've also got the highest primal brisket value. So that's that whole brisket, part of the primal box beef cutout. We got the highest price for those on record, except for a couple of weeks in May of 2020. And I mean, just sharply higher prices here. So if you're a barbecue fan, now this is choice, and certainly a lot of those places on the Texas Monthly Top 50 list are using, prime or another branded type of brisket, but certainly all of those are higher as well. So higher prices on the brisket side as well. And I thought summertime barbecue, good time to trot this slide out. But even within that underlying part of wholesale beef prices, we got higher prices going on. I should remind us something else about briskets. With that 50% lean, we could grind some more chucks, we could grind other things and produce some more of that beef for that market. Briskets, there's only 2 of them per animal. So as our cattle slaughter declines, our supply of briskets goes down. And so, I think that's an interesting cut in that we sell it as that whole primal, and we're putting it on our smokers as that whole thing, and so are restaurants. And so I think that makes that cut a little different than some other cuts on the carcass. So I've mentioned beef production, and what I've got here is a chart of beef production weekly. The red line is a 5-year average. The dotted line is 2024. The solid blue line is 2025. And starting in about April, we began to see some really large weekly declines compared to a year ago. So in the last couple of weeks, we've been down as much as 7-8% less beef production compared to a year ago. So, we talk a lot about, and you see a lot in the papers about great beef demand, and that's true. But this much tighter supply thing going on, I think, is part of the story here. And we ought to also think about this really in the context. I want to say go back and look at screwworms. When we closed the border in the last week of November of 2024, throughout 2024, we imported about 26,000 head per week of feeder cattle from Mexico. And the bulk of those, go to Texas feedlots. Really the Southwest is what gets those. And so we're to the point now with extended days on feed. We're really to the point now where we should be beginning to see some effects of reduced imports of feeder cattle coming through our feedlots, going through packing plants, and showing up as beef production. So I think we're going to continue to see the effects of that closing of the border really throughout the year. Because while we opened for a little bit from early February to April, the ports of entry are closed again. And so that will extend out throughout this year, really this hole with fewer cattle. Now for Texas, that's a big deal because so many of those are fed in Texas. And I mentioned 26,000 head a week. That's a lot of local corn demand as well, and feed demand and economic activity in our feedlots, which will also play through to reduce numbers of cattle to slaughter. And if we think about our overall smaller cow herd throughout the country, but also throughout the South, where we draw a lot of feeder cattle from, I think that's really some bad news for our value-added part, our cattle feeding sector and meat packing sector in this state for sure. Along with reduced production, I thought I would point out that for the last few weeks as well, we've had less beef of the beef that's graded, less of it is grading choice. So not only have we tightened up supplies of total beef, but even less of it is choice, driving that price up some more. We also had a cattle on feed report on Friday last week. Got to keep my dates in mind here. I guess that was on February, back on the closing, June 20th. And we had sharply fewer marketings. Again, this idea of fewer cattle going to market, less beef production, and certainly fewer feedlot marketings than a year ago. We also placed fewer cattle and some double-digit percentage declines, particularly in Texas and Oklahoma. Really, I think we have to believe that's related to border closures for feeder cattle, reducing those supplies. So while seasonally, placements were bigger in May than April, they were actually less than they were a year ago by about 8%. So again, fewer placements, fewer mouths eating our feedstuffs in feedlots as well. But our cattle on feed numbers are down. Take that on balance between marketings and placements. We've got fewer cattle on feed. Again, continuing this trend of fewer cattle on feed, which really stems from fewer cows, fewer calves, fewer cattle to place on feed, and we throw this import part in the mix, and we've got fewer cattle on feed. And I'll just close with one thing. I showed wholesale prices. Let's get to the calf market. Really, prices at shockingly high levels. Pretty pleasant if you're selling. And we've backed off in the last few weeks, but that's not typically surprising seasonally for this time of the year, with a touch lower prices. But when we're talking about averages in the Southern Plains, over $4 per hundred or per pound, over $400 per hundredweight for 400 to 500 pound calves, these are incredibly high prices. And so we may certainly see as usual, some seasonal pressure later in the year in the calf market. A lot of that hinges on heifer retention. If we are really starting to, if these prices and this rainfall are starting to get us to think about expanding and actually taking some action, then we'll have fewer heifers for sale in the fall, reducing the total number of feeder cattle on the market and kind of eliminating that seasonal decline. But regardless, these are pretty great times for the calf market. And Bobby, that's my last slide. Kara, that's my last slide. So I'll see if I can attempt to unshare.
One quick question for you.
Yeah.
Just a curiosity. What about the shoulder clods? Have y'all tracked any of the movement of greater numbers of those being sold for the instead of brisket?
You know what? I to tell you the truth, I hadn't even looked at those prices. Really, of those primals that include rib, loin, brisket, flank, short plate, and whatever the other one is that escapes me. Oh, chucks and rounds. There we go. Every one of those have been skyrocketing in recent weeks, except the rib. And the rib is something that, that's our rib eyes and things like that. Those tend to decline this time of the year. We tend to get a run up for Memorial Day, then they slide through the summer and peak again at, kind of the holidays in the fall. And it's more like the loin that takes off now. So really all of those primals are higher except the rib. All of them are higher than a year ago. It's just that the rib's been coming down. So you think about, hey, what can we substitute for briskets? Shoulder clods, all kinds of stuff like that. A couple others escape me, my mind right this second. But
I was just curious if y'all had been tracking those shoulder clods.
I actually do have that data, but I haven't looked at it.
All right, 10-4. Thank you for your update this morning. Greatly appreciate you being on. Dr. Welch, you ready to roll?
You bet, Bobby. I'll see if we can get the right window open here. And let's see if we are making that work. We'll start a slideshow from the beginning and hope we're up and going. So
looks
good to be with you today. I wish I could follow David's presentation with high and higher when it comes to grain prices, but I'm afraid it's going to be the exact opposite of that, of what we're looking at going on in our feed grain markets, and we'll explain that here in just a little bit. Again, exploring some of these fundamental factors that are driving our grain prices. And just to start out again, as Dr. Robinson mentioned, the export picture, tariffs and trade, competition from foreign producers, so important for so many of our ag commodities. And this chart is just a reminder of the share of total production of each of these major commodities that we do export, and who those major trading partners are. And so, of course, the largest percentage of crop that is exported are soybeans and wheat, but certainly significant amounts of other crops like corn, even ethanol, grain, sorghum. But particularly of note is in the current environment, before, when this 90 days runs out, we'll see if this picture changes, of who we may see reciprocal tariffs in a response to U.S. tariffs hitting some of these markets. But right now it's China. And if you look at the major buyers of soybeans, and even more so with grain sorghum, China is our biggest customer. And without them in the market, certainly has some tremendous short-term impacts, as we're waiting to see how the rest of this may unfold as we go through the rest of this summer and perhaps into this fall. Updates from USDA and the June WASDE. The only change they made for the corn balance sheet, you've got to go back to the 2024 crop, where USDA raised exports by 50 million bushels. So from 2.6 billion to 2.650. And that change then lowered the ending stocks for the 24 crop year, which is actually this October 31st, which lowered the carry-in stocks for the 25 crop year, which lowered the supply, which then lowered the ending stocks. So the situation got a little bit tighter. for the U.S. corn supply and demand situation, but we're still faced with the economic fundamentals or dynamics of compared to a year ago. These changes over here on the far right-hand side are comparisons to the 24 crop year that we're still looking at about a 3% increase in supply versus a 1% increase in use, and that's a recipe for lower prices. Aggressive in their use numbers. First of all, maybe continuing with the export picture, 2.675 billion bushels of exports is a big number. We're at near record levels of exports for corn at those kind of numbers, but we're also looking at record level of domestic use, and we'll just peek at that just a little bit, especially following up with Dr. Anderson's comments about the livestock industry. So these are the primary use categories for U.S. corn. You again see the volatility and the variability in the export number, but those are really high levels of exports. If you go over the last 45 years, some of the best that we have seen. Ethanol pretty well leveling off, not much growth there. We'll talk about that here in just a second. But that's a significant increase in feed use. And I find it so interesting in comparison or in context of what Dr. Anderson was just describing for us in terms of livestock numbers, the aggressive increase in corn for feed that USDA is projecting, particularly, and this is just kind of an encapsulation of that protein production, meat production in the U.S., red meat and poultry. These are from USDA that come out of the WASDE report. You know, we're not seeing a lot of growth, and as Dr. Anderson mentioned, our red meat production challenged with much what's going on in the cattle industry. Hogs perhaps making up some of the difference, but poultry expanding a little bit. So even if we expand total red meat and poultry production slightly compared to a year ago, it seems interesting that we would see such a sharp increase in corn for feed, which is the number one use category for U.S. corn. And what if you kind of dig into the numbers a little bit, energy feed use is very muted. It's not growing to any significant degree, but corn's composition of that energy feed mix is what is increasing. We're seeing less barley, fewer oats entering to that energy feed mix. And so we're shifting more to corn, but these lower prices. And so we're seeing corn being a larger proportion of the energy feed components that are going into the feeding industry. So even though the energy feed numbers may be not growing, flat, even declining somewhat, corn's share of that looks to be on the increase, and that would support, I think, USDA's more aggressive increase of feed use, in spite of what we see going on in the livestock industry. When it comes to ethanol, the blue lines are indicated in billion gallons over here on the left axis of gasoline consumption, and we're just nowhere getting back to pre-pandemic levels of gasoline consumption in this country. It did bounce back to some degree by the time we got back to about 2022, but since that time, the numbers from the Energy Information Administration are that we're bouncing around 137, 138 billion gallons of gasoline. And given the primary constraint of ethanol consumption being that we're going to consume 10% of whatever that number is. And so that does put some real headwinds on increasing ethanol consumption in this country. Now, as we did mention, we do export a good bit of ethanol. We could have some markets, and when we're sharing higher blending rates of ethanol, selling E15, you see some E85 on the market. But generally speaking, the primary driver of ethanol consumption is going to be that 10% of whatever gasoline is. And at this point, those projections are for not a lot of growth when it comes to the gasoline sector. And it kind of makes sense if you see what's going on around you. Gasoline consumption, energy consumption related to economic growth, and the prospects of that aren't real positive right now, as Dr. Robinson alluded to. We're seeing conventional vehicles on the road today, especially light duty vehicles. Amazing the efficiency, the miles per gallon that we're seeing on average cars out on the road today. So as those new vehicles are replacing those 10 and 20-year-old vehicles, what the gas mileage is on a new vehicle hitting the road. And then just look around at the stoplight. How many cars sitting around you don't even burn gasoline at all? More and more common. see those fully electric vehicles sharing the road with us. Even though those numbers are so very, very small, they are on the increase. And so I think this kind of makes sense that we may have seen peak gasoline consumption in this country. Those numbers may not come back. And so that does, I think, put some real constraints on growth of ethanol in this current policy environment. Export sales for corn, as we mentioned, they've been really strong this marketing year. We've got almost with a month to go. We're 2 months to go. We're almost at the target for the year, and USDA again, their numbers kind of support that. If you look at the major trading partners, if we start to draw into a retaliatory tariff situation with some of these partners, we could have a problem. But at this point, you don't see China on that list for corn. They're virtually absent from the corn market from the U.S. right now, as they are for wheat. But certainly Mexico is our number one trading partner when it comes to corn. And so the price influencing factor of the stocks to use ratio, the number I like to use is days of use on hand at the end of the marketing year. How long can we live next year on the crop that was left over last year? And for corn, that critical area is a 40-day supply. I get asked at virtually every meeting I go to, when are we going to see $5 corn? And it's a pretty simple answer. When we see days of use on hand below 40, you'll see $5 corn. That's the arena in which we see these much better corn prices. The WASDE in June tightened us up a little bit. We're heading into the 25 crop year, kind of nudging close to that 40-day carryover with exporting more old crop corn, lowering that beginning stock number. But what's really weighing on the market now is with this big crop that's on the horizon, the likelihood seems to be, and limited growth on the demand categories, the likelihood seems to be we're going to shift that days of use on hand further to the right over the ensuing months rather than tightening it up back to the left. And I think that's kind of what the market is anticipating. Again, the acreage report on June the 30th will provide a little more clarity on that. But certainly beyond that would be growing conditions. And if we were to have a really good growing conditions this year, a trend line yield going back to 1950, we could see a U.S. yield of over 183 bushels per acre. USDA is using 181, which is 2 bushels better than last year. And growth of that blue line over that 100 or 75 years has been about 2 bushels per year. So I think that makes us a strong justification of where we get a 2 bushel increase this year compared to a year ago. But if things turn out really, really good, 181 may not hold it. We could see the potential of something around 183. We got the crop planted nationally, just you couldn't draw it up much more normal. There were a few areas, Ohio and Pennsylvania, that ran a little behind. But generally speaking, the crop went in just textbook. Right, like you draw it up right on the long-term averages. You look at the drought map on the right-hand side is what the north central region, the Corn Belt, looked like on May the 6th. Compare that to where we were last week. All the red, the extreme, and the exceptional stuff, that's off the map. There's still some areas of Nebraska that are in more of the severe drought categories. Getting a little drier maybe in parts of northern Illinois, southern Wisconsin. But generally speaking, for this time of year, for that wide range of a region, the drought map looks really, really good. There's no threatening weather from an El Nino or a La Nina on the horizon. That's a very benign forecast for neutral conditions all the way through the summer, even into next winter. At this point, for the INSO alert system, those El Nino, La Nina factors, crop condition ratings were down a little bit this week, but we're still above average. The blue dotted line would be the long-term index. It's about 1980. And so if you look at where we are this year, we're running with 70% of that crop, good and excellent conditions. And those are when we see that 70% number, upper 60s, we're headed for a really good corn crop. That crop condition index this year is the red line. The black dotted line would be average. It typically declines some through the summer and then picks up a little bit late fall. The green line was the 2023 crop. There's 177 bushels. The blue line is last year's crop at 179. We've kind of caught back up to last year's and seem to be trading along that on par with a year ago at this point. So again, I think if you look at the what we know right now about the growing season and crop conditions, there wouldn't be much reason to dial back that yield expectation of 181 bushels. World corn production, just who are the big players in corn? China is number 2 and growing. That's not necessarily an increase in acres. They're doing a much better production of their yield, and raising corn production numbers coming out of China. But I think what's interesting to note, these 8 areas, that's 81% of world corn production. Every one of those is a positive number for this year's crop compared to last year. Everybody's expecting a bigger crop. And so again, you talk about factors of supply weighing on the market. It's not just in the U.S. We're looking at bigger numbers globally at this point. That blue line, there's your stocks to use, days of use on hand for the U.S. that we were just talking about. We're crowding that back up above 40 at this point for the estimate for 2025. Again, we should see that below 40. 2012, 2013, 2020, 2021, 2022, those were our really good crop marketing years. Crowding that back up a little bit now for this year. But look what's happening globally. Even with the strong world corn production, that world number is getting tighter and tighter. In fact, that's the tightest number we've seen for corn since 2012. And so if there were to be a major disruption in any of these major producing areas, we are certainly in a situation that I think we could see a very swift market reaction, in that global supply number is relatively tight. But much of that, the U.S. is the dominant factor of that world picture. And so if the U.S. is okay, we can absorb a lot of that. But it does put into context that we do see that stocks to use level, that days of use on hand globally is getting tighter and tighter. And price wise, that's not a pretty picture. It does look like we're following that seasonal pattern, that seasonal tendency post the normal seasonal high, which we would normally see in mid-June, about this time of year. And then you would expect prices to fall off as we get the acreage report, we get those good crop condition ratings, good long-term weather outlook, and then prices fall off. Well, we may have set the high this year back in February, and perhaps now looking at that move toward a seasonal low, even as we're pushing into July and August. But certainly not a lot catching the market, again, I think driven by these favorable production prospects at this point, really putting a lot of downward pressure on the market. Real quickly on sorghum, just incredible if you look at the increases of supply versus use in sorghum. Yeah, a bigger sorghum crop, increasing supply by some 18%. But look at that total use number. Going from 325 million bushels to 405, that's a 25% increase. So with a much stronger increase in use relative to supply, certainly that's the recipe for higher prices, right? Well, not for sorghum, unfortunately, in that overall sorghum is going to follow the overall price level of corn. The difference would be when we see strong exports, sorghum tends to trade at a premium to whatever corn is. When we see low levels of sorghum exports, sorghum tends to trade at a discount to corn. So even though its own fundamentals look much more positive year over year, sorghum is going to be dominated by what's happening in the corn market, again, with that price differential primarily driven by whether we're looking at an increase in domestic use or an increase in exports. That increase in exports for 2025 is a really aggressive number. For 2024, we don't look like we're going to hit 100 million bushels. This would obviously project that these tariff situations with China will be alleviated and that we'll get back to a more normal trading situation. At this point, these are the sales of sorghum in this current marketing year. Again, we're around 60 million bushels. China is 70% of the market. China is out of the market at this point. Mexico's buying a little bit more sorghum. But without China, that 100 seems completely unreasonable. And 250 really seems out of range, given the current situation. So again, as we get through the rest of 2025-26 marketing year, if we do see that market open back up, that would be extremely favorable for our grain sorghum producers. And again, that just shows that price comparison over time. This goes back some 20 years, that sorghum and corn, they're going to go together. Sorghum will follow corn, but there are times at which it will trade at a particular discount to the price of corn. And we see some years in strong export levels, 2014, 2015. it'll trade at a premium to corn, but it's going to follow corn. And again, that export picture primarily being the determining factor of that. And this is a little bit dated from USDA, but you can see the degree to which now sorghum nationally is falling below the corn price. And that looks like that will hold in this new marketing year unless this trade situation does start to alleviate. Again, that's what I brought to share this morning. Tight margins. Gosh, we need a crop. You're about to put pressure on prices overall, but if we can see our average yields, better than maybe our long-term averages this year, might be some prospects, at least generate some dollars in what looks like a pretty tough price environment at this point. So, Bobby, thanks for and Kara, thanks for hosting us here today. Always enjoy the conversation. Good to be with y'all.
Thank you again, Dr. Welch. Always really pertinent and timely information that sometimes we don't like, but it's good to have. So we need it. So greatly appreciate you getting up and being with us this morning. Good morning, Ms. Angie. How are you today?
Morning. I'm good, Bobby. How are you?
Good to have you on this morning. We have Miss Angie Martin, who's the Industry Affairs Director for Texas corn producers, and she's agreed to come on and give us an update on what's going on with the Texas Corn Producers Board. So with that, Angie, I'll turn it over to you.
Well, I appreciate y'all, you and Kara having me on today. I know my coworkers have visited with you in the past about some of our activities. I just wanted to hit a few things as far as the checkoff board goes. I know harvest has began in Sandpack County and areas around you. I'm hearing a lot of differences between the early planted corn and the late planted corn. And so it'll be interesting to see how those yields shake out. I would highly recommend, because this is going to be a long harvest. I had several of our directors down there telling me it's going to make it a long harvest with the separation of the early and the late. So just something to all you farmers. Remember your ag safety. Don't get in a hurry. Remember your ag safety, and let's make sure everybody is around for next year's harvest. The other thing I wanted to hit on as far as the board, there, as you're looking to market and as you're looking for your next year's crops, really talk to your crop insurance agents. And there's some new products. One of them is one of ours. It's called Clip. It's one that you can add onto your revenue policies to help you get that coverage in that shallow loss area. So just be sure you visit with your crop insurance agents to make sure you're using all the tools that you need to. Now, in our office, we wear two hats. We have the checkoff board and we have the association. So I was going to spend a little time on the association this morning. Of course, if you watch the news at all, there is a lot of stuff happening in Washington, D.C. Just this last couple of days, there's a lot of stuff happening in the Senate with the Senate Ag Committee, the Approps Committee, the Finance Committee. They're all meeting and trying desperately to get something done before July 4th. I don't know if that's going to happen, but they still say it's a high probability. Just a couple of things to hit on. All the marketing guys talked about exports and of course trade and tariffs is critical in our world as far as keeping that price high and keeping that days on feed lower. And so it's not just retaliatory tariffs, it's tariff problems at the ports as well. We had some major tariffs put on any shipping company that had a Chinese vessel. And so it was really adding to the cost of exporting And of course, farmers get to the back end of that. So we've really tried to stress the importance of, we need our commodities exported back out. And so when those ships come in, we need them to pick up U.S. crops and take them back. Um, a couple of things that you might not really understand, they're very technical. You've read a lot about the bird rule in the Senate. That requires whatever legislation has to meet certain guidelines. And there is confidence. This morning I read that the Senate Ag Bill looks like it's going to pass the bird bath, as they call it. This was on, the biggest problem was on the SNAP cuts and pushing some of that cost back on the states. That language has changed a little bit to where the Senate parliamentarian now says that unofficially, it has not came out yet, but she is signaling that that is going to work. We have been in constant contact with the ag committees in the House and the Senate, expressing concerns. And, we've had these continual extensions, and that's led to a lot of uncertainty. It's for our farmers as well as for their lenders. And so we're really stressing the need to get something out there to give some certainty and to make the safety net a safety net instead of an extension. A couple of other things that came out this week is the the text on the tax cuts. Tax cuts are, the tax bill is an important part of agriculture. A lot of those tax provisions that guys have been using were expiring, and we had really pushed to have, keep stepped up basis. Make sure if you're not going to eliminate the state tax to keep that level up higher, and to offer the bonus depreciation as well as some of the other titles. So a lot has been happening on that. And then just this week, immigration came back into the arena to be talked about. It looks like we're going to have some revisions and updates to H-2A and H-2B immigration programs. We had explained to USDA as well as our legislators that in ag we have to have labor, and that the H-2A program had worked for a lot of our farmers, and we need to make that easier. And it works great. And one thing that they have included in the discussion this week was allowing them to stay longer. And so that would be good, to stay longer till the job is done. So that is all stuff happening in DC. We as Texas Corn will be in DC in July. I'm sure there will be a lot of things happen between now and when we're there in July, but we continue to push for some type of certainty in not only the marketplace, but on the farm, in the lenders' offices and everything. And all of this is just ingredients in making a great crop. So we continue to work on that. We have talked a lot with USDA on some of our the programs that came out. The ECAP was the Economic Disaster Assistance Program. If you have not applied for that, you need to. The deadline is coming up on those applications. So I also know we've had a lot of staff reduction in our FSA offices. I'm a big proponent of county offices, But if you can't get in, you can do it online. You have to create a farmers.gov account, and then it's relatively easy to fill out the ECAP application. So I encourage you to apply if you haven't, because the time's running out on that. The water block grants that were issued to help farmers that had losses due to the water issue with Mexico. All of those are being handled through TDA. If you that is an online application. If you have problems with it, I would suggest you call TDA, or if you're not getting the assistance you need, you can call us and we'll see if we can help you with that. But that is out there as well. So you need to, I know you're busy down there, but you need somebody to look at that. The other disaster program that was not related to economics, it is, we had hoped that it would hit everybody in June. It's a little late. They've run into a couple of problems. I think that we will see something in the next couple of weeks on that. And it's going to be very similar to the very first um, uh, WHIP Plus, or the very first emergency disaster programs. It will use RMA data that'll come across. Your application will be pre-populated. You're still going to have to go in and or send it in or whatever, but it's going to be very similar to those other programs that we've had in the past. I would just say, as far as with the county offices, I know San Pat was hit with this as well. Be patient with those people. They're had a major reduction in force, and we're seeing USDA is going to make more cuts. So be vigilant. Don't wait till the last minute, and stay in contact. If you're not on their mailing distribution list, you need to get on it so you know what programs are there and what the deadlines are. I'd hate for somebody to miss a deadline because they weren't aware of it. The other thing I'd like to say is that we work with all our other commodity groups as well as our livestock groups. We have been very concerned about Mexico as a market, as well as Mexico cattle coming in. In Texas, we all of 96% of our corn goes to livestock. So that livestock industry is very important, and so we've been trying to express those concerns, as well as the livestock industry on it's a problem, and it's not an easy or a quick fix. So those are both important. At this time, with everything going on, advocacy is crucial, more important than ever. We have some really good directors from your area. A shout out to Colin Chopless, Ben Gwynn, Charles Ring, and then towards the Beeville area, we have Jim Skerrick. And I think all of that would be in this listening area. But if you ever have a problem, and you don't want to call us at the office, you can always call one of them. We can't help you if we don't know about it, and that's who we work for. So we want to do that. And advocacy is so key right now with all these things happening in DC. We've worked very hard to maintain and establish good relationships with legislators and their staffs, so that we can, they're hollering at us when they have a question, and that's what we want. We want them to let us have input with their decision making. There are a few differences in the proposed farm bill from House Ag to Senate Ag, but I think once it gets to conference, it'll all shake out, and I think it is going to be a much better and updated policy for our farmers, and help with some of that uncertainty. But our association is ran by membership, so we need you to join. You can go to texascorn.org and become involved. It's $60 a year. You get a free bag of seed, or you can do 3 years for 150 and get 2 bags of seed from our seed partners that we appreciate. But this is critical that we have members that we can, when we go to DC to advocate, we can say we have these members behind us. So I would encourage you to become a member, and also that's a way to stay informed on policies as well as deadlines and that kind of thing. Lots and lots of things happening in DC, and it's really hard as just someone that's trying to take care of their business as a farmer to stay up on all of that, because it just is constantly fluid changing. So this is the time to, I know things are tight, but this is the time to spend the $60 and be a member of Texas Corn, so you can stay in the know what's happening. Like I said, lots and lots of things are constantly being discussed and debated, and it would just help you stay informed. So anytime you need something, please call our office. The number's on the website. Bobby has our contact information as well as my cell phone. Happy to visit with anybody, but I would really encourage you to stay informed and know what's happening. Just like any transportation issues that come up, y'all have such a unique market with going right across the border. And I know we've had some trucking issues. We're working on that, but we want to be helpful for you and to take care of things that you just really don't have time to do in DC. So I'd continue to push that. I will say that our activities in the State House, we were able to take out atrazine and glyphosate off the labeling bill that was passed. You know, we don't want any of our consumers to ever think that we don't have a safe food supply, and I'm glad that we were able to get those 2 things out of that bill. But of course, lots happening. You've got lots happening in the State House as well, but we will see where that goes. So Bobby, is that kind of what you were wanting this morning?
Angie, that was great. A lot of good information. I know we as in the ag business know the complexity of all that goes on, whether it's production or lobbying or just so many pieces of this ag puzzle that most people don't know about. But it's our associations are really important to our ag community. And with that said, you know, we appreciate the Texas Corn Producers Board being a sponsor, and the Texas Sorghum Producers Board and the Cotton Board all are relevant to this little marketing update. And we greatly appreciate all of y'all's efforts toward on our behalf. So again, thank you for being on this morning, and as usual, really great information. Carrie, you got anything you want to add before we get off?
No, Bobby, I just want to echo your sentiments and say thank you to all of those that were willing to join us. I know this got us started early this morning. It's nice to have you guys join us and kind of give an update. I'm excited to pass the information out and along to those that we've got actively producing the commodities that we discussed in the county. I think it's going to be really neat. Excited to get it posted on social media and share the great work that you guys have put together. Again, what you guys are bringing to us is market updates that I think our folks need to be seeing as they continue to work through getting started with harvest and start thinking about what the cattle herd might look like moving forward. Because I agree with you, Dr. Anderson, we got some big decisions to make.
Again, thank y'all, and I'll like I said, I got some youth tours today, but I'll have the video out tomorrow. Nothing happens. So thank y'all. Y'all have a wonderful day.
Thank you.
Thanks.
Appreciate it. Good to be with you.
Bye, guys.